Good morning, good afternoon, and good evening. Welcome to a new episode of PairTrade Finder PRO, where we are going to analyze a pair uh, composed by the tickers AV and Victory Capital, so Alliance Bernstein Holding and Victory Capital Holding, both in the financial sector. This is PairTrade of the month for the December edition. And we have chosen this pair because it contains many instructive lessons we want to share with you. And we're going to also use in this episode a new structure based on a color code, a cheat sheet that will help us in the decision making process of whether we want to take this trade or not. Important to highlight is that everything we're going to see in this video is just for educational purposes and should never be taken as any financial advice. For that, please refer to the disclaimer at the beginning of the video and also at the slide at the end of the video. Signal appeared on the 18th of November. By just looking at the charts, you immediately can recognize interesting situation that this pair presents to us. It is immediately recognizable the fact that this trade has a big potential. We are going to analyze step by step all these graphics, but then the very first initial thing that your eye sees is a very horizontal ratio moving average, and that is something that we want to also perceive in a pair. Good correlation and, well, a good balance in the standard deviation motion with resistance levels predefined. So, as I already said, we're going to analyze this pair, and we are going to go step by step analyzing 12 parameters that we think are the most important in order to help us define and select whether we want to choose a pair and trade it or not. As already mentioned, the signal was triggered on the 18th of November with a standard deviation of 3.36, jumping from 1.66. When you see these kind of situations, always the first thing we want to do is check news. Going to Alliance Bernstein news and going specifically to 18th of November, we don't see anything specific that could make us think that was what provoked the signal. In that regards, Alliance Bernstein is clean and it's a go. Victory Capital, on the 23rd of November, it seems that the CEO, he made a stock buy of $1 million. So basically, an insider is betting on the stock, and this probably was what triggered the signal. Signal was on the 18th of November, and the news was known a couple of days after that, probably because there was a weekend in between. This is probably what provoked the signal, but it is not something that structurally is going to affect medium to long term the price of the stock. Not a showstopper for us. It's something that happened that allow us to have a very good situation in terms of the pair itself, but it's not something that ruin and filter or give us the sensation we shouldn't take the trade. The way we are going to proceed is once we have complete all the color code here in each of the boxes, we are going to evaluate if this as a whole is giving us confident enough that we should take the pair. So the very first parameter we already checked is news, and it is okay in that regards, so we mark it with a green. Next parameter is earning dates. So for that, we go back again to our software, select the pair that we are managing. You have the information available here. So when the signal was triggered, there was enough room in terms of timing, as the earnings wouldn't happen until the 28th of October for AB and 4th of November for Victory Capital, which is almost 2 weeks before the signal was triggered. So not an issue on that side. We had time more than enough. Related to dividends, there was no problem with AB, as it was the announcement for dividends was on the 5th of November, but Victory Capital had its dividend date on the 9th of December, which was 3 weeks from signal. 3 weeks, it's a period of time we don't feel very comfortable because we ask at least 30 calendar days, and the par was short on that leg. So we were not going to collect the dividends, and that made us go back to our cheat sheet and mark this box as red. Although this is not going to stop us from taking the trade, being strict, we have to mark this one red here. We take a quick look also to the rest of the parameters. We see a pretty good market cap. The rest of the parameters seems to be okay. So next one is pair momentum. This box here, and we want to identify whether the pair is trading or not. So in order to do that, we go to our charts, and once again we see that the pair is not presenting any momentum at all, which is what we want to see. Moreover, we want to analyze in each of the legs the price motion in order to see whether we are in a situation where each of the legs is going to behave potentially as we would like. And we see that in AB, on the 18th, we had some days that the signal was pretty flat, coming to kind of all-time high, in which we feel very comfortable because normally reversion to the media here will give us the direction we want to see for this leg because we took it short. BCTR is basically the opposite when the signal was triggered, which is here on the 18th. Yeah, after the signal, reversion to the media will potentially again tell us that this is going to go up in the direction we took the trade. So all in all, this seems to be the situation, the ideal situation. We can also go to this chart here to observe how the divergence was created, and it was here at this point all the way to this other point. So clearly the divergence that should recover after 7 days. In that sense, this is a very, very clear green. Next one is ratio chart, support and resistance levels. And in the charts, we see again that in the standard deviation chart, there is very clear zones marked where there is a resistance, but also a support. It is true that our signal, which is this one here, was slightly higher than average, but we know the reason for that, and it's the news that we have analyzed it. So in that sense, the ratio chart is clearly also a green. Next one is percentage from mean, and also check that a standard deviation is not higher than 3.5, because if it is higher than that, probably the affecting event is big enough in order to at least make us think whether to take the trade or not. This is the percentage mean chart, where again we see clearly the support and resistance level. And this is the standard deviation chart, where we see that the standard deviation was at 3.36, which is slightly high, but it's not overpassing our limit of 3.5. So in that sense, we will mark it as green also. Next one is RSI chart. We want to see the behavior of RSI because there is very good information that we can extract from there. So going back again to our software and taking a look to the RSI chart and comparing it with the ratio chart, the motion of the curve in the ratio chart was increasing, while the RSI was decreasing. So that's what we call a divergence, and this is something that it is very interesting to see in a pair, because we think that it incremented the possibilities of having a very profitable pair. So clearly RSI chart analysis is a green. Next one is correlation. Once again, we go to our charts. It was at 84.30, as you can see here, which is a very good correlation, and it has been flat for the last 300 days. So in terms of correlation, clearly this is a green. Next parameter is co-integration. Co-integration we wanted to see above 0.88, but it's something that we always want to see related to correlation. So it's something that we want to see somehow in combination, because at the end of the day, these probably are the two most important parameters when analyzing a pair. Co-integration when the signal was triggered, and the media for the last 2 years have been 0.99, and the average correlation that you can see here in the historical backtest chart is 83.43. That is a very good co-integration correlation balance. So once again, clearly this is a go. Take a look also to the fact that there is 6 trades in the last 2 years, and all of them were positive. So another good, very good sign. Next one is volatility. We wanted to see below 2.5 and take a look to volatility, which is this chart here. You see that when the signal was triggered, it was 1.83. So pretty good volatility. It is below 2.5, which is our limit. If 2.5 surpass it for whatever reason, we immediately begin thinking of reducing size, but it's not the case. Even more, the curve was decreasing on previous months. Volatility is clearly a green. Next one is compounded annual growth rate and drawdown. So going back to our backtest, we see that the compounded annual growth rate, CAGR, is 22.5, while the maximum drawdown is 20.47. So we have a gap which is higher than the maximum drawdown, and that's what we want to see. Now, it is true that the maximum drawdown, being at more than 20, is very high. So this is something that we are going to consider, and because of that, the relationship in between CAGR and drawdown, we are going to mark it yellow. Okay, so once we have
mark all our checkboxes with the corresponding color, what we observe clearly is a predominance of the green color by more than 70%. So, mm, based on the analysis we just made, this is clearly a go. Now, we wanted to share with you three hypothetical scenarios some traders use just to tell you how you could set up your system in terms of sizing for each pair that you trade and the maximum number of pairs that normally these people have in their portfolio. Let me reinforce that this slide is just sharing experience of some other people with you. As at the end of the day, it's your money and it's your decision how you set up your system. Now, in our case, and scenario number 3, so this one here, where we are exposing 5,000 per leg with a maximum capacity of 20 pairs, but normally in the way that we do it, we use only 15 to allow safety headroom. Maximum risk per leg is 2.5% of equity, CFDs in a leverage of 1 to 5, and although the maximum risk of 2.5% per leg could be a little bit higher than normally some people use, which is around 1 or 2% maximum, we think that the fact that we use two legs and one balance the other allow us to go slightly higher in terms of risk on equity. It is also true that the accounts being used here are not that big, so the risk that we are taking, we think, is more or less under control. But again, don't take this as a financial advice because it is not, and please refer to the final slide in this video where the proper disclaimer is made. What we also want to share with you is there are some important tips in terms of trade management that many people follows and we think it's are important. First one is if you are beginning with pair trading, normally people trade small, and once they feel comfortable with the system and psychologically prepared to absorb the drawdowns that are going to be appearing for sure, but in order to be able to allow the pair to evolve until it gets back to reversion as the system is based on, yeah, it is best to trade small. Use the 1.7 standard deviation exit rule in all your trades. There's also in the software fields max loss alert that allow us to set up stop loss and take profits. PairTrade Finder PRO, as you probably know, has also some time stop possibilities of customization, and you can do it from 30 to 100 days depending on your setup. So it's another tool of the software that we recommend that you use with discipline. Maybe those concepts sound a little bit unfamiliar to you. If that's the case, please go to lecture number 13 on the link that is below, where all these concepts are explained in much more depth. For example, in our situation, 336 is the initial standard deviation where we are starting from, and then applying the 1.7 rule, we will exit when the signal could reach 1.66, which happened at the 1, 2, 3, 4, 5, 6, 7 days, because it went to 0.084. So in this scenario, and using, in my case, in our case, CFDs with leverage of 1 to 5, what we observe is that in 7 days, we get a profit of 457, which is almost 23% of the equity exposed. So 23% in just 7 days, it is something that I would probably immediately sign forever. So with that, the only remaining thing on my side is to wish everybody happy holidays and see you in the next episode. All of our analysis is purely illustrative, not on a real account, and is for educational and informational purposes only. Trading is a high-risk activity and is not appropriate for all individuals. Nothing contained in our materials is to be construed as personalized financial advice. It's your money and your decision.